Hi everyone, so welcome to Investing for Value. So today I'm going to talk about oil tanker stocks and in particular the dividends that they pay. So as you would have seen some of my past videos, and I would have talked about quite a few oil tankers, and in this video I talk about the very same oil tankers, and I kind of just aligned them up in terms of some of the best dividend payers. So I put Capital Product Partners first because they are one of the biggest dividend payers at 14.9% on a share price of $9.47. So as we can kind of go through the history of this company and look at the dividends, and in the past they paid $1.26 last year, $2.24 the prior year, and in 2017 the same, $2.24, 2016 $3.24, and in 2015 they paid an extraordinary amount of dividends, $6.59. So when we look at that, it's pretty incredible. Like, they've paid some pretty decent dividends out. So basically this company owns 32% of Diamond Shipping, which is an oil tanker stocks, but they don't get the dividends from that company because that company doesn't pay dividends. What they actually do is they own quite a few oil container ships. So those container ships generate some cash flow, and they end up paying the cash flow out through dividends. So quite an interesting company, that you get dividends from the container ships and you get the share price growth from the Diamond Shipping end. And SFL Corporation is sort of in a similar boat, where they've actually got a very diverse fleet of ships. Majority of them are container ships. They also own some dry goods kind of ships, and they also own a little fleet of oil tankers. So they'll get a little bit of upside from their fleet of oil tankers. But majority of all these ships are actually leased out on very, very long-term terms, from like 5 to 8 years. So this is kind of like a pure dividend play, where they won't get increased rates, but they will continue to pay dividends in a very similar way. So you can kind of see by the history here. Last year they paid $1.40, 2018 they paid $1.40, 2017 $1.60, 2016 $1.80. My biggest concern will be that it's slowly been declining. Apart from that, if they're managing to pay $1.40 consistently, it's not a bad situation, particularly when that $1.40 means close to 13% return, which would be pretty incredible. Like, you're not going to find that many stocks that pays close to 13% return. As you can see in the past history, they have a pretty good record of paying 35 cents per quarter. So if that's what you're looking for, then that's not a bad thing. Though the question is, how good will the share price appreciation be? It probably won't be as strong, especially when majority of their fleet's already been leased out on long-term contracts. They won't get the really good rates from the current spot market, particularly with the oil tankers. So with Capital Product Partners, you at least get some exposure from their ownership on Diamond Shipping. Alright, so now I've got Nordic American Tankers. Their share price is $5.92, and the indication is a 9.3% dividend. Though what Yahoo tends to do is they take the last quarterly dividend and they actually times it by 4, whereas in the past Nordic American Tankers actually hasn't paid that much dividends for a long time. Last year they paid 10 cents, year prior they paid 7 cents, and before that that's when the good times were at 53 cents, $1.37 in 2016, and 2015 they paid $1.38. So 2016 and 2015 were some of the best years for all these companies, as you'll see quite soon. So as you look here, yeah, that 56 cents, you must be wondering how did they get that? Well, they took the last quarterly dividend that was announced of 14 cents and they times it by 4. So when you look at Yahoo sometimes, you just have to be mindful that it's actually just taken the last quarterly figure and times it by 4. They may increase the dividends as they go, because if you look at the past 4 quarters, they went from 1 cent to 2 cent to 7 to 14, and the big question is, what will the next dividends be, and will it be even higher? So if it continues to increase, it wouldn't be a bad return. Alright, so now Frontline. So Frontline is at $9.05 and it's indicating a 5.52% return. In the past year, this company's paid 10 cents, so not that remarkable. 2018 they didn't pay anything, and 2017 they paid 30 cents, 2016 they paid $1.05, and in 2015, which is usually a golden year for a lot of companies, they paid 25 cents. As we can see here, they did announce a 40-cent dividend in December in March this year, which was pretty good, especially when you compare in the prior quarters that they paid 10 cents, 15 cents, 15 cents, 10 cents. And all of a sudden they jump up quite a lot to 40 cents. So it kind of shows that Frontline is earning some pretty decent profits, and now they're paying some very, very high dividends. So I kind of like the sign that Frontline has given here of 40 cents. And if they can continue that for the next 4 quarters, it would be $1.60, giving a dividend yield of 17.68%, especially when you look on that the share price is $9, and they could be paying well over $1 over a 12-month period. Next company is DHT Holdings. Share price is $7.24, and it gives it a valuation of $1 billion. It's indicating a dividend return of 6.47%. And what's the return been like? It's 20 cents last year, 8 cents the year prior, and then 20 cents, 71, and 53. And as we can see here, very similar to Frontline, the recent quarter they announced a 32-cent return to shareholders, and in the past quarters it was 5 cents, 2 cents, 8 cents, 5 cents. So you can kind of see that in the last quarter for like Frontline and DHT Holdings, the dividend in the last quarter has increased quite dramatically. Even for Nordic American Tankers, it's also increased quite a bit, especially if you compare to the prior quarters. So if you don't mind the risks and you kind of see good things coming, then Nordic American Tankers, Frontline, DHT Holdings is actually pretty good. Or if you're just here for dividends and you don't really want that much exposure to the oil tanker market, then you would be pretty interested in Capital Product Partners and SFL Corporation. So very quickly we can already split these oil tanker type companies into kind of segments. Alright, so now we've got Teekay Tankers. Share price is $19.82, giving a valuation of $627 million. And we can see last year they did not pay a dividend, and in the year prior to that they paid 24 cents, and prior to that they paid 96 cents, $1.44, and $1.92. So the big question is, will they be able to resume the dividends in the prior situations? It looks like they probably could. So the question is, so if they paid like $1 return, it would give it about a 5% return, which is not too bad. Alright, so now I've got Tsakos Energy Navigation, $3.20 stock, and its current valuation is $306 million, and it's indicating around about 3% return. So if we look through their history on their dividends, which is 10 cents last year, 15 cents the year before, 20 cents the year prior, and the highest was 29 cents. So if we go that they could resume their 29 cents, we'd be looking at about a 8 to 9% dividend, which wouldn't be too bad. And in this current environment, we're looking at probably one of the best years for this company. So if we go 2016 was about, if that was replicated, then it would be a pretty decent dividend return. So now we've got Euronav, share price is at $11.05, giving a valuation of $2.4 billion, and the dividend that's been indicated is 5.43%, though that's actually not too accurate. The past dividends was 35 cents, though this 35 cents also includes a 29 cent return that they that they're announcing on the shareholder meeting in the 20th of May, so it actually has not been paid. They've only paid a 6 cent dividend, which they have done for the last 3 years, and 12 cents in 2018 and 2017. It was in 2016, 2015 that the dividends was the best, from 77 cents to $1.69. So you can kind of see that these companies used to pay some pretty decent dividends. The big question is, going forward, what would the dividends look like? With Euronav, it's a little bit uncertain because there's not that much consistency about this. Now I've got Scorpio Tankers, $20.69 stock, giving a valuation of $1.2 billion and indicated return of 1.83%. As we can see here, in the past 3 years they paid 40 cents, and the year prior to that it was $5, so it went from like $5 to 40 cents, which is quite an incredible drop. There's also like a big share dilution, from 16 million shares to 49 million shares, close to 50 million basically. So I don't expect $5 to be replicated, though we could potentially look forward to some dividends of well over $1. So that wouldn't be too bad. If we got $1 on $20, it would be slightly less than 5% return, which wouldn't be too bad. Alright, so now I've got International Seaways, share price of $20.75, giving a valuation of $690 million and indicating a 1% return, which doesn't seem too high. So as we look for this company, the company has not paid any cash dividends since 2016, which is quite an incredible, like it's incredibly long since they last paid one, though they did announce one in February this year after quite a few years, and wanting to pay a 6 cent dividend. Hence what Yahoo's done, they've taken that 6 cent dividend and then they've times it by 4, though there is no guarantee that they're going to continue to pay more than 6 cents, though there's a high potential that they're going to pay more than 6 cents, though it doesn't seem like a very high return. So I'm not too sure International Seaways would be great when looking for a high dividend return. And Diamond Shipping, as I mentioned at the start, these guys don't pay a dividend. So as we look here on their dividend policy, to date we have not paid dividends on our common shares. So that kind of just sums it up there. You have two companies that don't have a great deal of exposure to the oil tanker industry, except Capital Product Partners does have a 32% shareholding in Diamond Shipping that doesn't pay dividends. So it would be through the share price growth, and they pay some decent dividends through their revenue from their container ships. And then you have Nordic American Tankers, Frontline, DHT Holdings that have in the past quarter paid a very large increase in dividends. So these three stocks, for me, they kind of stand out as the pure plays that are also paying some pretty incredible dividends. And then we've got stocks like Teekay Tankers, Tsakos Energy Navigation, Euronav that we don't have that much certainty over how much they will continue to pay, though they will pay some dividends, and it shouldn't be too bad. Though I kind of like these front three, and these other three they're okay, and the same with Scorpio Tankers. They might be in a region of 5%, whereas Nordic, Frontline, DHT, we're looking at returns in excess, like that could be well over 10%. So that's what kind of why I like these, because they could potentially be some very high return dividend stocks. Though if you look at these two here, SFL Corporation and Capital Product Partners, they pay well over 10%, though I don't think they'll get that same exposure to that oil tanker market. And then we've got basically International Seaways that hasn't paid a dividend in such a long time, and only just recently announced a dividend of 6 cents. So the question is, how good would a dividend look like, and will they stop paying dividends after a while again, particularly since they haven't paid one since December 2016 and only resumed this year. And you have Diamond Shipping that doesn't pay dividends. So that's the consideration you should be looking at and deciding upon if you're deciding to buy these oil tankers based on dividends. From all the research that I've done, Nordic American Tankers, Frontline, and DHT stand out in terms of their shipping fleet, in terms of their dividends. So that's why I kind of like these three the most. And these other four aren't too bad in terms of Teekay Tankers, Tsakos Energy Navigation, Euronav, and Scorpio Tankers. And I think if you're interested in the share price growth, then International Seaways and Diamond Shipping would be decent for share price growth. Though if you just want pure dividends and you're not too worried about the share price, Capital Product Partners kind of gives you a bit of both, because they own a bit of the Diamond Shipping and they have their own container ships. Or if you just want a stock that's basically really reliable on dividends, then SFL is the one. Alright, so I hope you enjoyed that. I hope you learned something. Comment below if you have anything that you would like to talk about. Always interested to hear your perspective, or any questions that you have around these companies or other companies. Until then, good luck investing, everyone.